Welcome back. Here with us on Trading Hour. The equity market has taken off, as we've been telling you. We've got big gains thanks to the way bank stocks are surging higher. But as promised, right now we are going to talk a little more on metals, and this is from the commodity side. We have Manisha Gupta joining in for exactly that. Good morning, Manisha.
Good morning, and thank you so much for that. Well, we are looking at the metal prices today, where we have seen the prices starts Asia with slightly a weaker note, but for the month of May it has been quite positive, quite contradicting fundamentals really, because on one side you have the US and China trade tensions, and on the other side, with various global economies opening up, the demand recovery also has been seen majorly coming in from China. But Guy Wolf from Marex Spectrum is with us on phone line now. Guy, hi, good to have you. What has been your sense? Do you see demand recovery is coming back from the global markets, China and ex-China?
Yep, thank you for having me. There are signs of recovery. I think it's important to remember that prior to the pandemic, most base metals were in a fairly positive frame of mind. There wasn't an excess of supply anywhere. And also, China is still the main demand driver, 50% of global demand for copper. And as it sort of went into this pandemic first and came out of it first, then what we're seeing is the pickup in recovery coming out of China earlier than the rest of the world is starting to recover.
What is your sense? I mean, would you say that the metal prices perhaps have bottomed out now? Have we seen the worst of it? Because we started the year with recession concerns and then COVID and then lockdowns and demand completely disappearing. Are you looking at, a bottom already done? From here on, what is your sense now going forward for the next couple of quarters?
No, I think we've seen the lows. There's bound to be volatility, and of course, no one really knows if there's going to be a second wave or renewed lockdowns. But on the assumption that the pandemic gradually continues to improve, then yes, I think it's highly likely that we'll see base metal prices and commodity prices in general go higher, and that will be driven primarily by fiscal stimulus and the recoveries coming out of these countries. I think China previously, when it has attempted to stimulate its economy, it was more focused on credit-led expansion, and it's not looking to do that anymore. So it's much more likely that we're going to see the stimulus being targeted towards areas like construction, in my view, which tends to be very positive for things like copper.
Guy, also there are US and China trade concerns back yet again. I mean, the trade discussion is on one side. It's all taken a new turn now on the issues in Hong Kong. What is your sense, especially with the US saying that they could be coming out with sanctions and some announcement by end of this week? How serious can this get for the economies and the trade and the metal prices?
Yeah, well, again, it's important to remember that we've been having this trade war rhetoric for the best part of 18 months already. The US already imposed a lot of tariffs on Chinese goods, and actually before this pandemic, the situation around the trade war was seen to be improving. So I think there's always going to be rhetoric, particularly as we're heading out to a new US presidential election. But rhetoric and actions don't always align. And if you look at the data, then you can see the Chinese have been buying goods from the US in line with that agreement that they had to gradually lift restrictions. No doubt there's, these things are negotiations, so there's always going to be 2 steps forward, 1 step backward in these things. But no, I think, again, in balance, I think that we're more likely to see an improvement in trade terms than a deterioration, because we've already seen the deterioration last year.
Sure. Guys, so, there is huge stimulus measures that we've seen come in from various global central banks and governments. How do you rate that? I mean, that really seems to be really fueling a lot of gains that we've seen in various asset classes, whether it's equities, crude oil, or metals for that matter. So when the recovery does happen in a more sustainable manner, where do you see the smart money coming in? Where do you see a better recovery?
Yeah, I think probably definitely want to differentiate between fiscal and monetary stimulus. I think that central banks learned a lot from the global financial crisis in 2008, 2009, and the main lesson that they took from that was don't delay and sort of overstimulate rather than understimulate. Every attempt that they made in 2008, 2009 to do something which hopefully would be enough always ended up being something they later regretted. So I think the lesson they took from that is you have to act as quickly as possible and as aggressively as possible. And I think they've done that, and that definitely put a floor underneath the capital markets and sort of addressed a lot of the dislocations we were seeing in funding in particular. So short-term overnight funding, commercial paper markets, which were completely frozen, actually were frozen for a very short period of time, whereas in 2008, 2009, they remained frozen while central banks kind of worked out what they needed to be doing. So I do think that had a very, very important positive effect. However, that really is just about providing liquidity. It doesn't actually solve anything. So fiscal stimulus is probably the key part of the recovery. And, again, has a lot been done? Yes. Could more be done? I believe so. However, it really is a function of how long the lockdowns persist. But I think most governments have indicated a policy of whatever it takes. So if it appears that more needs to be done, I think more will be done. It's clear that most economies are going to have to find ways of incentivizing companies to re-employ workers to address the unemployment problem. So I think they're going to have to find ways to do that, to subsidize employment. I think you're much more likely to see fiscal stimulus targeted at the jobs market rather than tax cuts or anything like that. This is not, the effort will go into helping people who are not in work as opposed to people who are in work. So I think you're likely to see strong incentive programs to try and get employers hiring again.
Okay. All right. Guy, a pleasure talking to you. I look forward to having more connect and more conversations with you. So clearly taking two leaves out, and that really is that the worst perhaps is over and there could be more stimulus coming into the pipeline right now.
Okay, you know what, Manisha, we love the sound of anything positive these days. Not that commodity prices going up is good for a commodity consuming country like India, but nonetheless, at least there is some sense of optimism out there. Thank you very much for joining in with that conversation. We need to take a quick break, but before we head into that break, here's something that all of you viewers must take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor, that empowers you to make the right decisions with your money. Now, if you invest in the stock market, you would probably know about contract notes. This is a legal record of all the transactions carried out on your account in a trading day. While you may trust your broker to transact on your behalf, do insist on obtaining contract notes, bills and ledgers within 24 hours of any transaction. Take out time to verify the trades and transactions with your broker, and you can also verify them on the NSE website.